3, 2, 1, liftoff. To me, it sounds like launching a rocket to the sky. I'm ready to explain to you what is it the 3, 2, 1 buy down and also the 2, 1 buy down. What's up everyone? This is Greg. Hope you are having a wonderful day. In this video, I'm going to break down what is the 3, 2, 1 mortgage interest buy down and how to calculate the cost. Alright, let's do this. If at any point throughout this video you like what you see, please hit like and subscribe or leave a comment below. Let's get to it and find out how to use this powerful tool that will benefit you as a home seller and as a home buyer. The 3-2-1 buy down is where typically the seller issues a seller credit to buy down the buyer's rate for a fee. So the interest rate will be lowered for the next 3 years, and it works like this. Assuming the interest rate is at 6.75% today, and 3-2-1 buy down will reduce the rate down by 3% the first year, 2% the second year, and 1% the third year. After that, the rate will go back to the original rate of 6.75% for the remainder of the loan term, which is typically about 30 years. So what does this mean with the loan amount of $500,000? I'm going to make an example without a down payment to make the calculation simple and without including the tax and insurance, because I have no idea which county you'll be buying in and what the tax rate will be. Now let's go to the spreadsheet to see how it works. 3-2-1 buy down and 2-1 buy down. I'm going to explain that for the amount of purchase of $500,000. So let's go over the 3-2-1 buy down first. The first year, the rate will drop from 6.75% to 3.75%. The second year, the rate will be 4.75%. Third year, the rate will be 5.75%. And by the fourth year, it will go back the way it was at 6.75%. So for example, the buyer's mortgage payment will drop from $3,244 to $2,315. That's a saving of $927 a month. The second year, the monthly payment will go a little bit higher, but it will still be lower by $634 a month. And by the third year, the monthly payment will go up to $2,917. By the fourth year, it will go back to original rate at 6.75, and the monthly payment will go back to $3,242. So the 3-2-1 buy downs, it drops the rate for the first 3 years when you own the house. With the 2-1 buy down, will drop the rate for the first 2 years. So the first year, the monthly payment will drop by $634 and the rate will be at 4.75. Second year, the rate will go up to 5.75 and the monthly payment will be dropping by $325. By the third year, it'll go up again at the rate 6.75 of monthly payment $3,242. So the seller will pay on behalf of the buyer to reduce the rate for them. So you will see that the 3-2-1 buy down is very expensive for the seller, $2, versus the 2-1 buy down would cost them only $11,508. So it's all comes to between negotiating between the two agent and buyer and the seller to negotiate on which one the seller is willing, if any, to help with the buy down. So this is only one of the tools. Another tool my clients have been using is the 5 years, 7 year, and 10 years adjustable rate. So one of my clients, for example, went with the 7-1 adjustable rate. So the first 7 years of the mortgage, they'll have a fixed rate, and the rate originally was at 8.75. It's a jumbo loan, very expensive rate at 8.75. 7-1 rate reduction, it came to 6.75. So that's 2% rate reduction for the first 7 years. After the 7 years, the rate will go back to whatever the current market rate is. So whatever the index rate is, plus a margin set by the lender. So it will be whatever the index rate at this particular year, it would lock for 1 year, and each year will adjust accordingly. But within the 7 years, at any time, the buyers can refinance the house. If the rate drops within the 7 years, they could refinance with no prepaid penalty. You make sure of that with your lender when you do the adjustable rate and get the lower rate. With all that said, I'm not a licensed mortgage professional, so any information discussed here must be verified by a licensed mortgage professional. Speaking of which, if you are considering making a move and you need a vetted licensed mortgage professional, you are invited to get in touch with me, or one of my team members will be able to help you to hook you with one of those lenders that you might see a good fit to work with. We're happy to connect you with them. The idea with the 2-1 buy down or 3-2-1 buy down is that you take advantage of having mortgage purchase power right now, and once rates drop, which they are projected to do so in the next 12 to 18 months, buyers will be able to refinance Now you can see this option that will benefit the buyers. Actually, some of our lenders are offering free refinancing for the buyers that use the 2-1 buy down. Seller will also benefit by selling their home quicker, not worrying about doing the price reduction because the house sat on the market for too long. It is win-win, as homes will start sitting longer on the market. A lot more for sale will accumulate. Sellers will have either to take a massive price reduction to chase down the market, or they are going to have to do a full remodel to get their home to meet the desire of a smaller pool of buyers and compete. It all can be costly. So many experts out there projecting rates will go down within the next 12 to 18 months. It is also anticipated that many of the people buying right now are going to refinance. If you are a busy professional and you are thinking about buying your next home, my team and I put together a foolproof system to help you do this seamlessly. So connect with me to discover if our system is the right fit for you. I hope you find this information in this short video useful and you get value out of it. If you did, please like and subscribe so you will be in the know when I publish my next real estate related video. Please leave a comment in the section below with any questions you have. Thank you for watching. I'm Greg Kalanjian with Newcastle Group team. See you at the next video.